Hey traders, checking out of the stock market today. Absolute complete control from the bears, and we have key support levels coming into play. Bulls last stand in the short term, or we are headed to fresh fear lows. I forgot to mention I recorded a video over the weekend about psychology as a trader and the path that I went down and different books and resources that I utilized to help prepare me to be a trader later in life. So check that out on our YouTube channel, Psychology of a Trader. So a real ugly day out there today, and the Bears had absolute complete control. That's one aspect that was nice. There were no fake outs. SPY did not change the 5-minute trend at any point in time, and neither did QQQ. Every single bounce was either a 5-minute lower high, or the bounces that did break resistance did not result in a higher low and higher high. The other aspect that kept me from looking to buy dips on a day like today is the RSI. We were not that beat up. Look at the 5-minute RSI for SPY. Every single time we got down to oversold, we'd see a short-term bounce, set a lower high, and it would cool things off to allow for another leg down. So my style of playing bounces is matching the aggressiveness of bears. I want a free fall. I want every time frame oversold. And if we're not even getting short-term time frames oversold, I'm not looking to buy bounces in any meaningful way. So the S&P 500 futures chart opened higher. There's a bull move into the open, but we knew we're just looking for a 4-hour lower high. And if you looked at SPY, it was just looking for an hourly lower high. So I couldn't look at that and say, we're going to dump all day today. But I could look at that and say, bulls are not proving a thing. And if we do not break our resistance of 433.37, 432.63 from Friday afternoon, it's just an hourly lower high. And so the bears came out swinging first thing. Right when we opened, we dropped hard and fast. And again, the bears had complete control from that point forward. So the general theme, if we're opening higher with a pre-market move, bears are all over it. And the best bounces are coming from extreme drops and gap down opens. So that's something we're keeping an eye on. As far as just having direction each day, what direction am I looking today? So SPY, daily, fear low, 410.64, is the next support level that we're looking at from here, and it's about 2% to the downside. So the question this week is, can bulls defend that level? If they do, we need an hourly trend change. With where we stand right now, there's a ton of space for an hourly lower high, and the weakness is continuing after hours. We would need a big enough hourly bounce to change an hourly trend. If we change the hourly trend, we zoom out and we scout a daily lower high. So again, we're in a weekly, daily, hourly, 4-hour, hourly downtrend. So it takes a long time to shift that momentum. You change the hourly trend, you scout the daily lower high. You change the daily trend, you got to change the weekly trend. So it's not a fast turnaround unless it's a V-shaped bounce, which has not happened at this point, and definitely generally needs the help of the Fed for SPY bulls to V-shape, as we've seen in the past. So we're looking towards the FOMC mid-week. Next week, so a week from Wednesday, I believe. I'll have to double check the date, but pretty sure that's when we're looking. And of course, watching headlines still, but today, no real new headlines or anything. We're just following through with momentum. I'm separating things into two groups. We've got the weakness stocks. This is the most group, the bears, the weekly, daily, hourly downtrends. QQQ, XLF, SPY, individual names. And over here, we've got the bulls that are performing really well. Metal stocks, miners, oil stocks, oil itself, commodities in general. We've got the fertilizer names like MOS. We've got war names like LMT. These are names that are all very strong in uptrends on every time frame, while other names are in downtrends on every time frame. There's always a bull market somewhere. There's always a bear market somewhere. And so it's just finding where's the capital shifting around. So if I'm looking bullish, there are hourly oversold bounces and daily uptrends to be watching for higher lows on all these names. And on all these names, we're scouting hourly lower highs. We're scouting daily lower highs, as long as this relationship remains the same. So today, when the broader market opened higher, we had a pullback in metals and miners. That pullback was an hourly higher low into continuation, and this bull move was an hourly lower high into continuation. So the trends from the end of last week continued through today after just a little shakeup pre-market. And we'll get to all of the commodities and things that are standing out stronger in just the second half of the video here. So bears in complete control. NASDAQ's the same story. Support is closer in play. What will stand out to me would be if we break support with zero follow through, we're then going to be watching for a falling wedge just because that'll be a second support break. If it leads straight into a multiple day bounce, that's when I'll be scouting a falling wedge. But at this point, it's all about 318.26. Tons of space for an hourly lower high. Bears in complete control on the daily, weekly, and short-term timeframes. And it is okay to have a bigger picture mindset and say, I want to be looking to long this name when the fear subsides. Number one, we know things can always go lower than we think they can. And when I look at the S&P 500 2-month time frame, I look at this chart and I say, this chart is extremely bullish and healthy. There is nothing wrong with this chart whatsoever. And I also look at this and say, we can drop a lot more than this. So those are two conflicting, completely opposite scenarios, but it keeps my mindset reminding me we can always see another leg down, but reminding me big picture, this isn't a big red flag as far as the uptrend is concerned. You show me this chart, you don't tell me what it is, and you don't tell me what the time frame is, the answer is bullish every time. So it all depends on your time frame. The point I want to make is you don't want to be constantly banging your head against the wall, trying to go long every single day. You have to accept that we are in a downtrend and in bear control on a lot of time frames right now. So if you are looking to establish longer term positions, doing so during fear is a great idea. I personally want more fear. I want weekly oversold conditions on the S&P 500 if I'm going to be looking to add some no-touch positions to my IRA. And I will look to do that if we do see weekly oversold. The reason being, if you go back and look historically, probabilities are in your favor if you are buying weekly oversold conditions. Things can change, but that would be, if I've got a 10-year plus mindset, that's just fine for me as far as that's enough fear. So we'll see if we get there. We would need another leg down, but that is something that I'm looking at. But again, the bottom line is if you are looking to establish long-term positions, be protective. So if I'm looking for a monthly higher low, then I'm looking at SQQQ and I'm protecting that position with hourly lower highs. And there are ways to balance things out. You don't want to have a straight up only bull mindset or a straight up only bear mindset. It's best to put on the glasses of every side here. I guess there's only two sides. Of both sides, and there are opportunities. SMH leading the way to the downside. We knew it was weaker than QQQ. It broke its fear low. This is now the lowest price that we've seen here on SMH since all the way back in July. So we are now at 8-month lows. The next support level is 247. We already broke that. 242.09. And then there's not much. There's a gap down here. 233.82. The weekly downtrend continues as our guide. Bigger picture. What's the 2-month chart look like? This is way overdue. Can't go straight up forever. The big tricky thing is, do we have the blow off top like all the things that went straight up? Remember our growth names? How did they do with their top? They pulled back real hard. So this is the scenario where I'm saying this chart is just fine. There's nothing wrong with this chart. And then we get another big leg down. So that's something I'm aware of as well. We know Bitcoin has done it plenty of times where we're holding on just fine. Nah, I don't like the Bitcoin example. But the point is, the moves that were big, there's cannabis, let's go to CGC. Big time bull moves that you then give it all back. You didn't establish much support on the way up, and that makes dropping down much easier. So the question is that going to happen to the entire market, or do we find a healthy higher low on this 2-month time frame? And again, if you look at the retracement size, there is no big deal on this retracement at this point. It's not ugly right now. It can get ugly. I don't know if it will. We're going to take it one day at a time. But right now, it is not ugly. Let's go to Tesla. So Tesla was trying to set a daily bull flag. We started today saying, if the broader market bulls show up, Tesla and TAN are positioned well. And I'm thinking of the narrative, oil prices through the roof, alternative energy, less dependence on Russia, all that kind of mindset, saying if the broader market bounces, I believe these names will outperform the broader market. They were positioned real well today, but we just dropped. And so you can't fight that momentum indefinitely, is the word I was looking for earlier. So it held up. We fought that momentum to start the day. We traded fine first thing. Tesla made a bull move and broke the high of Friday, but then we succumbed to market weakness and gave it back. So it was a daily bull flag attempt. The broader market ruined that daily bull flag attempt. We're still going to scout a higher low compared to 700, but it's now a tougher hill to climb if we're going to change this daily trend to the bulls. Hourly downtrend is our guide. Lots of space for an hourly lower high to be the result of the next bounce. I will be interested in Tesla for a long-term IRA position if we get S&P 500 weekly oversold conditions. Just one that I stick in there, just like my crypto long-term no touch, just like my SPY COVID long-term no touch. Stick it in there, worry about it in 20 years. So that is a mindset that I have for fear. I only do my long-term no touch shopping in fear. TAN. So TAN still looks fine. Daily higher low set, 66.78. Bulls must break 73.62 to confirm the trend change. And a gap up open today, closing near the low. But we can say if SPY and QQQ bounce on the daily time frame from here, TAN bulls are positioned really well. Of course, if we don't, if we drop down to lower lows and break our fear lows, then TAN is likely to continue its pullback, potentially breaking 66.78 and ruining this bullish setup. So it's just a question of when is the broader market going to bounce and where will TAN be positioned when that takes place. I did make an attempt at a swing entry on Tesla today and stopped out fairly quickly. Small position size because I was giving a decent amount of wiggle room under that 825 level. But I was looking to do the same thing that I did with NIO back here. It's the same trade. Solid bounce, big bounce, looking for the little bull flag higher low. It worked on NIO. It didn't work on Tesla. And so that was only the only meaningful trade attempt I took today. Otherwise, I am still riding some protection, SQQQ, as long as the bears have this control. But I know my trading style as an oversold bounce trader, and I'm patiently waiting. My MO here, my goal is preserve capital and then deploy capital when the trading conditions align with your edge. And so there's a lot of people making a lot of money as a bear. I've never made a lot of money as a bear. I've made some wins as a bear. I definitely have traded as a bear plenty, but my big wins are big bounces. So I am waiting for those conditions, and that's me personally. XLV still the strongest major sector. Daily consolidation underway. Scouting a higher low. Let's go to the 2-day time frame to condense things down a little bit. So I'm viewing this as low, high, bear break with no follow through. And now are we shaping up a lower high compared to 134.46? Certainly shaping up that way. And if it does, we'll have to hold the low and confirm the trend change if bulls are going to prove anything to us. So XLV is on Team Bull comparative to everybody else, but there's a lot more names on Team Bear. And XLF certainly joining with this quadruple bottom breaking, and we fell right through it. And we're on the verge of daily oversold. We can look back and say, daily oversold, COVID, we dumped way through it. But since then, daily RSI hitting 30 has been a good time to buy. There's not a ton of examples. It's only 3 examples, and it's a different market environment right now, but something to keep an eye on. Weekly RSI is now in the 30s, but it's now a lead bear. Hourly downtrend, next time we bounce, we scout the daily lower high. Bears in complete control of XLF. IWM, big red day, trying to hold 187.92. It's a double bottom. So like SPY and QQQ still have that support, but there's space for a daily lower high even if we bounce from here. Hourly, just looking for a lower high. If we change the hourly trend, we zoom out, we look for a daily lower high. In my opinion, we would need some kind of significant news catalyst to just change the daily trend from here. Bears are comfortable because they know, well, even if we bounce, I'm just looking for a lower high. As long as we keep setting lower highs on bounces, bears remain comfortable. Biotech sector, near its low, fear low 81.71, still holding. Hourly trend change back to the bulls needed if we're going to set a daily higher low. But weak overall. Everybody's just looking at their fear low. Some names have already broken it. Most names have not, but they are in play. On to the commodities. So first off, the dollar is real strong. Commodities don't care. Dollar is in breakout mode. 103.50 is the most important level. Long-term 5-year equilibrium here. If we reject from 103, it's not 103.50, it's 103. If we reject from 103, we remain within this equilibrium. If we break it, it's a very notable break. But bulls have complete control in the short term. Daily breaking out. Metals don't care. Gold looks good. So gold on the daily, continuing its breakout. All-time highs are on the table. $2,076. So we are currently 3.5% from testing all-time highs, roughly speaking. And the 4-hour higher low just set at 1961. So again, heading into the open, this is what gold was doing. Weak. And the broader market was bouncing. And 15-minute oversold bounce marked our 4-hour higher low with EMA 12 support. If you are a crypto trader, that's a trade we take often. In a strong uptrend, 4-hour EMA 12 aligning with 15-minute oversold backburner, that's a buy. So if you like backburner bounces, you're looking at commodities because of how strong they have been. Gold daily stair-step pattern, higher low every day for 7 days. Plenty of space for a daily higher low to form when we top out. We were following the silver 4-hour cup and handle last week. Took a while to play out, tightened up a bit, but we did break out to that higher high. We're now back testing and revisiting some of these levels, but we're weaker than gold right now. We can see gold is testing the high on this 4-hour bounce, and silver is still potentially positioning for a 4-hour lower high. It'll be a short-term red flag if we confirm a 4-hour downtrend. At that point, daily consolidation is underway, and we scout hourly oversold conditions. Miners, brief pullback on the morning. 5-minute oversold, straight into a V-shaped bounce. That's a 3% bounce, which means for the leveraged ETFs, 6% bounce to start the morning. So again, there are bull plays out there, 7% bounce. Tons of space for the daily higher low. When we start daily consolidation, we'll keep an eye out for hourly oversold conditions to look for that daily higher low on GDX. Hourly higher low is currently 37.61. Hourly uptrends are our guides on these lead bulls. And again, just looking at LMT, big breakout, scouting a daily higher low, scouting hourly oversold, coming off all-time highs. MOS fertilizer, big breakout. Definitely extended. I'm not comfortable looking bull here, but I'm comfortable looking for an hourly oversold bounce to scout a daily higher low once that daily consolidation begins. So if you like bounce trades, there's definitely a plethora where we're scouting daily higher lows next time we pull back. Oil, certainly another one. Big upper wick, 4-hour, still an uptrend. Inside bars, we would have to confirm a 4-hour downtrend for daily consolidation to be underway. We scout a daily higher low. We scout hourly oversold conditions. And oil names like XOM, same deal, closing strong, lead bulls, scouting hourly backburner bounces. And nickel, just for fun, absolutely insane move. Commodity space is getting a little nutty. We saw oil to the absolute extreme, bottom of the barrel fear, and the pendulum has swung to the absolute extreme, FOMO euphoria, people talking $300 a barrel. So that's the way markets work. This was a faster swing than normal over a 2-year period with events that accelerated those emotions, but fascinating to watch. So bounce plays on the lead bulls, hourly lower high plays on the lead bears, more lead bears than lead bulls. And that's where we stand. Hope you had a good weekend. Check out the psychology video, do good things, and we'll see you tomorrow. So in today's trading and gardening analogy, we're going to be talking about patience and paying off time with dividends. So every single plant here started back in October as an individual clove of garlic. And in a few months from now, 9 months after planting them, they will each give me a head of garlic with an exponential gain. So when we're starting out trading, we know it's even a lot longer scope than that. And when I was first starting out, I had a mindset that was too short-sighted. You know, when I'm in year 2 of trading, I was thinking, all right, I'm looking to benefit myself with this time that I'm putting in year two, I'm trying to see these gains in year 2 from what I'm doing here. And I didn't have the mindset of this is going to set the stage for 7 years from now. So when 2017 crypto exploded to the upside and I was in flow state trading it for a long time, that was my 7th year of trading, and I really started to get the feeling every single hour of work that I had put in over the last 7 years was all leading up into that one moment, and nothing else before it mattered, and this is what the stage was set for. And it even happened with me passing up certain opportunities. I watched the 3D printing sector explode to the upside, and I made very little money from it. It was a missed opportunity, but I learned and I said, okay, exponential gains, FOMO, euphoria, new technology, and I made note of that, and that definitely played a part in capitalizing on the opportunity when I saw it again with cryptocurrency.